In the world of trading, few names inspire as much respect as Stanley Druckenmiller. Known for his role in the legendary short against the British pound in 1992, and for running one of the most successful hedge funds in history, Druckenmiller is often described as a trader who married bold conviction with uncommon flexibility. Over 3 decades at the helm of Duquesne Capital, he compounded capital at nearly 30% annually, without a single losing year. This is the story of how he did it, what shaped him, and the mindset behind his remarkable success. Stanley Druckenmiller was born in Pittsburgh, Pennsylvania, in 1953. He grew up in a middle-class family. His father worked in chemical sales, and his parents divorced when he was still young. From early on, he showed the kind of drive and curiosity that would later define his career. He attended Bowdoin College in Maine, where he majored in English and economics. Interestingly, he never saw himself as a numbers guy in the narrow sense. He has often said that what drew him to markets was not spreadsheets, but narratives. The way entire economies and societies move together in response to incentives and policy. After Bowdoin, he began a PhD in economics at the University of Michigan, but he left before completing it. The reason? He was offered a job that would set him on a different path, as a stock analyst at Pittsburgh National Bank. It didn't take long for management to notice his talent. Within a year, at just 25 years old, he was promoted to head of the bank's equity research department. The lesson he carried forward from this period was that fresh perspective often mattered more than tenure. And he was never afraid to back his own judgment. By 1981, confident in his ability, he struck out on his own and founded Duquesne Capital Management with just a few million under management. What started as a small partnership would eventually become one of the most consistently successful funds in the world. By the mid-1980s, Druckenmiller's reputation was spreading. His performance at Duquesne caught the attention of none other than George Soros, who was always on the lookout for talent. In 1988, Soros invited him to join the legendary Quantum Fund as a lead portfolio manager. This was a major turning point. At Quantum, Druckenmiller was suddenly responsible for billions of dollars, operating in the fast-paced, high-stakes world of global macro trading. His role wasn't just to find good trades, but to anticipate the biggest shifts in currencies, interest rates, and capital flows worldwide. Soros became both mentor and collaborator. While the two men had different personalities, Soros often cerebral and theoretical, Druckenmiller more instinctive and pragmatic, they shared a philosophy. When the odds are overwhelmingly in your favor, size up aggressively. The partnership with Soros reached legendary status in September of 1992. Britain was part of the European exchange rate mechanism, which required the Bank of England to maintain the pound at a fixed rate relative to the Deutsche Mark. But Britain's economy was struggling. Unemployment was rising, growth was weak, and defending the pound meant raising interest rates to punishing levels. Druckenmiller studied the imbalance carefully. He concluded that the pound was overvalued and that the government would eventually have no choice but to devalue or exit the ERM entirely. Initially, he suggested building a $5 billion short position against the pound. Soros listened, agreed, and then famously told him to think bigger. The position was expanded massively. On September 16, 1992, Black Wednesday, the Bank of England tried desperately to defend the currency. Interest rates were hiked. Billions were spent intervening in the markets. But by the end of the day, the pound had collapsed out of the ERM, and Quantum walked away with a profit of about $1 billion. The media credited Soros as the man who broke the Bank of England, but Druckenmiller was the strategist who identified and executed the trade. That day cemented his reputation as one of the sharpest macro thinkers in the world.
Stan Druckenmiller manages Soros's Quantum Fund. I asked him about the events last September.
It was inevitable. It was at a conclusion that could not be avoided under any intellectual thought process. And I must say, as the person actually managing the fund, that would have led me maybe to do $2 or $3 or $4 billion. And that was where the combination of experience, courage, whatever you've heard about this man, came into play, because it was he who pushed very, very hard on me to take the position to where we took it, and actually wanted to take it further, but we didn't. We ran out of time.
Yes. Soros leveraged his portfolio and ended up betting more than the entire value of the funds he managed. But basically, you took the whole quantum fund and bet 1.5 times that. That's really called betting the ranch.
Well, no, actually, in terms of the risks we take, it wasn't. It wasn't even a full exposure, because the risk of loss was maybe 2.5%. So if 1.5 times 2.5% would be, let's say, 4% loss, it wouldn't have killed us.
Despite that triumph, Druckenmiller has always emphasized that no trader is infallible. In the late 1990s, during the technology bubble, he misjudged the extent of the rally. Like many seasoned investors, he thought tech stocks were overheated. But instead of standing aside, he got caught up, chasing the market late and suffering significant losses. It was a humbling experience. As he later admitted, it wasn't being wrong that bothered him. It was abandoning his own discipline by following the crowd. For Druckenmiller, the episode reinforced the principle that trading isn't about being right all the time. It's about cutting losses quickly, protecting capital, and pressing the advantage only when the odds are tilted decisively in your favor. Through it all, his flagship fund, Duquesne Capital, became a model of consistency. Over nearly 30 years, he achieved an astonishing average return of about 30% annually, and, even more remarkable, he never had a single losing year. By 2010, Duquesne had grown to manage around $12 billion. But success brought its own problems. Druckenmiller found that the larger the fund became, the harder it was to maneuver with the agility that had given him his edge. Eventually, he decided to return outside capital and convert Duquesne into a family office, saying the pressure of managing that much money had become too stressful.
I'm still managing money very actively.
For family or for...
Family and the Family Foundation.
Right.
So I go to work about 6 and I come home at 6, so I'm doing that 12 hours a day.
Yeah.
I'm still in love with markets. The only thing that's changed is I'm not competing anymore, so I'm not managing other people's money, but I love markets and I love the intellectual challenge as much as I ever have.
Is that what you love about markets, the intellectual challenge?
Yes, also I
love being rich.
I like, no, not so much being rich as I like to win. I have a disease. It's a competitive disease that it gives me a thrill to win.
When asked about his edge, Druckenmiller often comes back to a few key ideas. Flexibility. He believes the market itself is the best economist. If the data changes, you must change with it. Being stubborn is fatal. Conviction with size. It's not enough to be right. You have to bet big when you have the rare alignment of fundamentals and timing. Risk first. His guiding principle was always, don't lose money. The winners will take care of themselves if you survive the losers. It's a philosophy that blends aggression with humility, knowing when to strike hard and when to step aside. Away from trading, Druckenmiller and his wife Fiona have devoted much of their wealth to philanthropy. They've supported educational initiatives, medical research, and community programs. One of their largest commitments was a $100 million donation to establish the Neuroscience Institute at NYU Langone Medical Center. They've also been longtime supporters of the Harlem Children's Zone. In this sense, Druckenmiller's legacy isn't just about finance. It's also about giving back, using capital not only to grow wealth, but to expand opportunity. Stanley Druckenmiller's story is one of discipline, adaptability, and balance. He shows that the greatest traders aren't those who predict the future with certainty, but those who recognize when the odds shift and act decisively when they do. From Pittsburgh to Wall Street, from Duquesne to quantum, his career reminds us that markets reward flexibility over stubbornness and risk control over ego. And perhaps the ultimate lesson is this: long-term success in trading is less about brilliance in a single moment and more about the ability to survive, adapt, and thrive across decades of change.